Yeah, so I don't think the markets have bottomed yet. The equity markets certainly have not. I think Bitcoin and crypto is closer to bottoming than the stock market, mainly because I think you have that goldish type safety play that eventually Bitcoin will turn into, right? So as the macro gets worse and worse, and people get scared of being in stocks and the economy, the idea of turning towards a Bitcoin definitely makes a lot of sense. We're not there yet, so I want people to understand that. But at some point, 12, 13,000, wherever it may be, I do think Bitcoin bottoms out and then starts to grind up. The macro is going to be a tricky thing. I really think we're in for a long period recession, mainly because the Fed can't bail us out. If we look at the past 10, 20 years, every recession or every market dip like the COVID collapse, the Fed was just printing money. Well, that was great when we have 2% inflation or less, but now we have 8%. And even if it drops to 4, how does the Fed print us out of a recession at 4, which would cause inflation to potentially spike to 20%? So it's going to be one of these longer periods, which I think is a great opportunity for crypto overall, because you're going to see these new technologies, these other ways to kind of figure things out coming to the forefront. So I would say just prepare. People should prepare for still some more volatility. Maybe another next leg lower in Bitcoin, but the buying opportunity is coming. I think for us to get to that point, number one, we need to see more maturity in the crypto sector. So we look at an asset like Bitcoin that's only 13 years old, right? So it's very young in the scheme of like the stock market. I mean, if you even looking at just Apple's been around since the 80s, so it's 40 plus year old company. So I think you need to see that. I also think you have to see regulation. I know everyone loves the decentralization aspect, but at the same time, if you're going to actually turn Bitcoin and other cryptos into like a safety haven, then you need to know the rules. I need to know the rules, right? So I'm allocating some of my capital towards crypto, but at the same time, there's no way I'm putting like a few $1,000,000 in crypto because I don't know what the heck the government's going to do. Right. And I don't want to be caught with my pants down, if you will, in that scenario where they come out with strict rules and Bitcoin dumps out by 80%. I don't think that's going to happen. But the point is that you have fiduciary responsibilities from a hedge fund perspective, pension funds, and that's the money we need to attract to crypto. You get pension funds alone to buy in like 2% of their pension fund into Bitcoin, and you're at like 300,000 overnight, right?
Oh yeah.
So the only way that's going to happen is if we get the rules. Like, just give us the freaking rules already. Don't drag this out, because honestly, that's what's hurting crypto right now, is that we just don't know what rules we have to play by. The first thing is, right, so as soon as I think the SEC will approve the ETF for spot, as soon as they lay out the groundwork. They probably won't do it ahead of time, because like imagine if they allow the ETF to come to market, you get a bunch of investors in there, and then they throw a curveball of like regulation that we didn't expect, and then everyone who just invested loses like 80% of their money or something like that. So I think they'll wait for that regulation first. And then as soon as that's in place, as soon as they kind of announce it, I think within probably like 3 to 6 months, you'll see an approved spot ETF. So I think that's exciting. That's going to give investors in stocks, like people that don't have crypto accounts, which, let's be fair, there's still a massive amount of people that don't invest in any crypto. Yeah. That's going to give them an avenue of comfort to invest. And you'll probably see like I've even envisioned a gold Bitcoin ETF, like where it kind of like there's a allocation into gold. And so, I mean, it could almost draw you into this dual safety haven, right? So you think it's the digital gold, but then you have the actual gold, and it could be kind of a cool idea too. Though there's so many opportunities out there once that spot ETF is approved. This is just the latest example of the Fed being totally wrong. You could go back to like 2009. You could go back to 2000. In 2018, they started raising rates. In late 2018, the stock market collapsed like 20%, and then they started cutting again.
Yes.
Because they didn't want to let that happen. Then you go back to 2009, literally Lehman was failing, and then they're like, okay, maybe we should do a little stimulus now to offset that. And so they're notoriously late to the party, and they just try to play catch up, and then they go too far the other way. And I have no idea why. I mean, I don't know. It's a mess, and they have never shown their ability to actually do things right, in my opinion. So I think what's going to happen is they're hiking rates. Number one, we have to think about it like this. So when Volcker was around, interest rates were like 12%. He hiked them to 18%. That's a big hike, 6%. But if you think about it in percentage terms, it was only a 50% raise from where we currently are, 12 to 18%. Now, if you look at where the Fed funds rate was this time, you're talking like 5, 6, 700%.
Right.
So the impact on the economy is going to be exponentially bigger than what we saw in the 80s. And I think that what we're going to see is the Fed saying, okay, we see the economy slipping into recession, but they'll be like, just like transitory, they'll be like, oh, it's going to be a mild recession. It's going to be mild. Then it's going to get so bad, and they're going to say, well, we can't lower interest rates because inflation's still like 4%. And then it's going to get worse and worse. And finally, they're going to be like, holy cow, we're in like a depression almost. Now we got to cut rates really fast, play catch up. It's going to just go around and around. Yeah, so I think number one, it's a deep, deep recession, maybe close to worse than that. It would be breaking where things just start to collapse. And you have all these things that are connected. You have derivatives, you have the stock market, you have pension funds, all these things. And what you'll see is a breakdown where you start to see these failures going on in the system where the Fed has to start plugging it. And we even know that the reverse repo market, which is the money that banks park at the Fed on a nightly basis to earn interest versus lending it out, we're literally at $1 trillion a night, a day, basically. And what that tells us is that the banks are no longer lending money, and that's showing you that we're starting to see a freezing up in the credit system. So I think all of these things are precursors to a bigger breakdown. But I mean, I think when they say breaking the economy, it is literally you're looking at a recession that we can't get out of, maybe stagflation, which is kind of the worst of all scenarios. So the common theme would be that oil should go up. I actually take the opposite side. I actually think oil is going to continue to fall, not because those aren't bullish signals, right? I mean, number one, when OPEC cuts, from what I heard, they said 2 million barrels, but I heard that they were underproducing by 1.3 million already. So it really turns out to be about a 700,000 barrel cut. So it's not as drastic as it sounds, just because there's a lot of refineries that are down and have been down and so forth with capacity. But I think the key is to understand that the slowing in the economy that is taking place already is going to be so much more dramatic in terms of the reduction in demand for oil versus just the strategic reserve, needing to be replenished. So for me, I think oil's headed much, much lower. I see by 2023 sub $50 crude oil. And I know that's counter kind of to what everyone's thinking, but remember that if you take the global economy, and we're looking at China, we're looking at Europe, we're looking at, basically all of the countries inclusive of the US, and you just slow down growth by like 2%, you're probably like at negative 10 million barrels a day in less demand. So it should actually be okay. I'm not surprised that they released the strategic reserves. We knew that the elections were coming up, so they had to try to drive it down. But just the Fed hiking rates is slowing things down, and that'll do its job and bring oil in.